Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. We are recording here Friday, April 28th at 4:30, right after the market closed. My name's Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. How we doing, Barry?
Doing very well.
Another month in the rearview mirror.
Another month, man. That's it.
So this 2023 is a third over now from a
Yeah,
trading perspective.
right.
It's
Yep.
wild, absolutely wild. And we had a fairly wild week. On today's show, we're going to cover the big five with Barry, which is ES, bonds, gold, crude oil, copper, the dollar, and the euro. And in commodity land, I don't have a lot to go over this week, but copper and nat gas are two that I think we'll spend some time on, in addition to discussing some of the other ones and what's going on there. But here we got Bitcoin, Barry. Nice recovery, huh?
Yeah. Well,
Now,
a couple of bars, but yeah.
I mean, we got on top of this level, which is really, really important. This is that
Yeah, that's impressive.
28.8 level, that 28,850, 860 area that we thought was important. And today we got a full bar above it. Now, the thing you got to watch out for here, this could go two ways, right? We take out this high, then we're heading up towards the half square up here, which is around 33,300. That'll be sort of our next target. But if we fail here, we got a lower high, right? And then we got to see, do we take out this trend line, and do we take out this low here? Then it's heading down here, towards the next half square around 24,300.
Right.
Right now, it could go either way. The bulls, as long as we're sitting on top of this full square, the bulls are in good shape. If it loses that full square, then the probabilities shift towards the bearish side. So we know the level to watch. And that's, oh, by the way, all the levels will be on are on a Google Doc spreadsheet, which, I'll post the link to when we post the link to the video tomorrow. But this is the key right now, this 30 or 28.8, 28.9. That's going to be your key for Bitcoin going forward. Anything else you want to point out here on the Bitcoin chart?
No, not much. I mean, in another sense, we're still range bound. We're in that box that we started in the middle of March. Yep. So,
and we're in this area here that we did some work in last May, June.
Yeah. To me, it's here nor there. Let's see, which way it breaks out and settles. So we really didn't settle last time. We kind of broke back down below again.
Yep.
So I'm kind of keeping an eye on that box. So using the March low there, halfway, that box right there.
Yeah.
Yep.
Yep, that's a good box to look at. Anyway, we got a lot to cover on your side. Let's see what this big week that we had cycle hits and everything going into. Let's see what happened. Still in the range, and look at how that circle still held again, huh?
Just hanging in there.
That's a good circle, man.
Yeah, it's a decent circle, and I think I adjusted it by like 2 pixels, so it's still there.
It's good, man.
Yeah.
Very, very good.
Well, let's see where it takes us. It did catch the low on Wednesday, and once we took out the Wednesday high, and that was it. Came back up to 150, hang around there. Today we went back and forth a little bit around 150 and cleared it, and that was it.
When you get these circles, man, it's really great because when you catch the edge, you get those speed moves,
Yeah, right there.
Yep.
So we'll see. I mean, it could really fly next week or not if we break out.
Right. If we come out of the circle, then you get the drop.
Yeah. And especially if we break to the downside, of course, the circle's a lot closer. So let's keep that in mind. And that also means the velocity of that would be also faster.
Right.
Yeah. So this week, well, where did we leave off last week? With 141.50. Never seemed to be able to leave it, So
4150, 4038 were the areas, right?
Yep. So the fact that we didn't quite get to 4038, we can forget about the circle, but just quite didn't get there and we reversed means, I mean, right there, it just means there's strength in the market, right?
Yeah.
And we had that little 3 drives to a low that came in on Wednesday that I posted on the 30-minute chart. So you get little hints of when a low is in place.
Right.
And I mean, we're still in this really god awful range. You can't dress up a pig, right? It's like,
no, it is what it is.
And so let's see. I mean, what we haven't done yet is really go up and tap the 90.
Nope.
So maybe next week, which is about, what's it, about 42.25, 42.30.
Yep.
It's possible that we go up and do that. So to review, not much. We just broke to the downside. If you take that range right there, it looks like a false break. And I think it was, because we had a fast move out of there. Now, it's possible that we go up and take both sides, make a false break up above here.
Yeah.
At 90 and come on back down.
I mean, just look at it. Would be really hard for them not to go to grab those stops if they wanted to fuck around.
Yeah, this high, yeah, we'll see. It's going to be interesting to see how it all plays out.
Right.
The point is, this high was kind of important, and you can see how that still hasn't been taken out for a couple of months. So
no, it hasn't.
So something's happening. So going into next week, I would say, especially with FOMC going on, again, we can't really leave 141.50 as a reference.
Right.
It's not even support resistance at this point. It's just the reference to see if we can settle above it or not. So if we can sort of settle above that, then I think we could make this into the next range, which I thought this might start to do.
You mean between the 90 and 40 to 150?
Yeah, between 41.50 and like 23.30, that range right there. Let me draw it out. Something like that. So that's a possibility. So a couple of things to watch for next week. I think it's, if we reverse to the downside, taking out today's low would break the circle next week. So that's to the downside. And I think, I was looking at a lot of my work, and what's funny is this is perfectly balanced for a move. I mean, it looks like a move is coming. It might be a little bit sloppy, but there is a move coming, and it looks like it could be to the downside. So we definitely have to be aware of that. And especially if it starts, let's say FOMC kicks it off or something and we start heading lower, I don't think that's going to be just a quick dip and then rally again. I think that could start maybe a couple, 3 weeks down leg. So we have to watch for that. And the opposite of that is also true. I think the time for consolidation is over. So if we, following FOMC, let's say we happen to somehow hold above 41.50 or we're well above that, then I think we have a lot more to go to the upside. So I think next week is pivotal in that sense. I don't think we're gonna, the likelihood that we're still stuck in the range, this range, is very low in my opinion. So we'll see, but it's going to break one way or the other. I think there's more evidence to the downside, but we haven't really tested the 90. So that's what I said. I think we can go either one way or the other, but the thing we want to remember is either way, it could go for a longer period this time, sort of like this leg here, or this leg, or that leg, but a movement. So that's what I have for next week. Anything you want to add?
No, I think you got it nailed. That 90 is the ceiling, and this 41.50 is sort of the balance point where we keep sort of vibrating around.
Yeah, this is the block, exactly, for sure. And if we lose 41.50, I think that's could hint towards what I was talking about, having a leg, get a leg started to go down, like one of those selling May kind of legs.
Sure. Price will lead the way.
Yep. All right, let's go on to the weekly.
Oh boy. Right around the full square we're vibrating, huh?
And we're kind of breaking out of that triangle
Yeah.
we had.
Yep.
So we'll leave that one out for next week. But I think this trend line is going to be key going forward. And I'll
make a channel. Yeah, that's a nice channel.
Channel out of that. There we go. So this is what I mean by, we could break to the downside. Yeah, we could break to the upside. Yeah. And you can see the entire month has been on this line, 216 degrees up from that low. And here was the high, the high came in right at this line.
At the half square, yep.
Yeah. But, it's not exactly to the point, but you can see in retrospect that
it was really significant.
Yeah, it really nailed it. And this square
caught the low, yep.
Yeah, caught the low. So it's, and you can see that's a 72-degree move. It likes to move in 72 degrees. So we did halfway up, 50% of the square. So if we do have a bear market rolling, then I think this can be sold. And, well, to argue the other side, the first time we hit the 50% was right there, coming off of that low. And, not much of a sell-off, came back again, not much of a sell-off. Here's our third try.
Right.
Either way, what I was trying to explain in the daily chart was that if we clear this, there's definitely room to run up, right? And if you clear it to the downside, there's definitely room to run down. So that's what we're looking at.
Well, we talk about these lines as being decision points. There's a major, major decision point at this line. It's going to happen.
You mean here, right?
Yeah. It's huge.
And what's even more interesting is, remember these boxes that we drew up?
Yeah, your equal moves.
These are the measured moves, and we did 2 of those boxes, right? So coming from that low, if we were to get a box and set it up here, we're right at the top of that box.
Right.
So everything's pretty much where they should be. So we'll see how it works out. I don't think we have to jump the gun here.
Right.
We just know where the level is and just
let it pick a side.
Yeah. And just so you guys know, it's 41,
41.50. Yeah.
So that's why we've been rotating around that.
Yep.
All right.
So that's a very good visual of what the hell's been happening.
But we're going to move over to this channel, which means if we break this channel line, we can pretty much say that we're going to go, maybe down another leg before it's all done. But the channel is an up channel, so keep that in mind too. You got to be mindful at these points. We can't be just kind of running into this willy-nilly, right? Because
and you can't be like set in your ways in terms of what you think's going to happen either. You got to be open.
No, man, you got to be
to the different possibilities.
Yep, super flexible. And well, the other thing was we had this 27 cycle go in.
Yep.
Now, if we take this out and we really settle above, up in this area, that means that cycle really didn't do much.
Nope.
And the meaning of that is a couple of ways to read it is that we're going to go higher.
Bullish, yeah.
Bullish. So, so the key to take away here is that we're going to get a, somewhat of a directional move coming out of this next week. And
we don't have to anticipate it. We just need to watch the levels and let it tell us.
Absolutely. And well, now we know where to watch. 41.50 is still the level.
And 42.30.
Let's see if we can get above it or not. Yep. That's all for now for the ES. Yep. Moving on to the bonds. Really didn't do much at all. We were just kind of consolidated in the same range. The reason I say there isn't a whole lot to talk about is we're just stuck in this.
Yep.
And the forecast is we're going to continue to be stuck in this.
Yeah.
And if you can trade the boundaries, fine, that you can do that. But for now, not much to say. One thing to notice is, we have this equilibrium line and we
holding nicely.
Well, what's interesting is when prices got here, the line was already there,
Yep.
because the line is not using anything past the C.
Right.
So that was one. This is a second
2.
tap.
Yep.
And we might be coming up to a third right around FOMC.
Interesting. Very, very interesting.
Yeah, it's kind of an important thing to watch, I would say.
Mm-hmm.
Okay. Anything you want to add?
No, I think you captured it in the box. We're perfectly sideways.
Yeah, a little bit of patience.
Mm-hmm.
And here's the weekly. Not much different, really. Here's the box here. And these are to be broken, so let's see what happens. We are in this bigger expanding triangle, and I can't imagine us not getting down here sometime soon.
Agreed.
Now, yeah, keep the powder dry. Let's see what happens next week. Crude was good. Crude's been good. We went up
Pulling
to the
back,
80, yeah. We went up to the 83 level, which is our upper boundary that we've had, for a long time. This didn't just pop
months
up.
and months.
And months and months and months, right?
Yeah.
And went up there, caught it, came back down to 73.50. And looks like we're back in this range again. Not much to do unless you can trade within the box here.
Mm-hmm.
So it's a little boxed up, but all of these things that are getting boxed up are going to bust out one of these days. So we just
agreed. It feels like energy's building in a lot of markets.
Mm-hmm. So, and I think this low is probably the one. I think we're in, and this is probably the pullback.
Mm-hmm.
So, at least speaking for myself, I think long side's probably the one to latch on to.
Agreed.
And unless we take out 73.50 because that held fairly nicely for a couple 3 days, right?
Mm-hmm.
So long as we're above that, I think for now, just for reference, because if we take out, you get to the lower level, we're not going to have a higher low probably. So using that for now, I think this low is fairly solid. If it gets taken on, it'll be probably later, maybe in June, July, we might come down to that. But for now, I think it's set to go. So I would say long side, long as we're above 73, that would be the takeaway.
Okay.
And the weekly kind of supports the entire story because we just came back and tapped the 50% line.
50%, yep, half square.
So here we are, what to do. And here's our box. So
it's a box, but it definitely has some bullish undertones. You got a higher low, you tap the 50%.
Mm-hmm.
You pushed up, made a higher high.
I think crude, yeah, for sure. I think trade the long side when you get those setups.
Yep.
That's what I would say.
Mm-hmm.
Moving on to gold.
Pretty bullish correction so far, huh?
Another correction, of course.
Yeah.
And but it's kind of bullish,
It's very bullish.
There are hints of bullishness in there.
Mm-hmm.
For one thing, we're holding above the 90, which is a big deal.
Big deal.
All right.
Mm-hmm.
So long as we're holding up above there, I would say it's bullish, but we'll consolidate in here. We'll see what happens. But for now, that's all we got.
I mean, if you look at the run out of the March low, just going sideways here is really, really bullish because you're not giving up much in terms of price pullback.
Yeah, it's a very bullish move.
Mm-hmm.
And, we had about a 180 going up, 180 degrees going up into this. So the fact that we can still hold so tightly near the highs, it's bullish, man. There's no other way to read that.
Agreed.
So let's see. We'll watch it closely. The key level to watch is where the 90-degree line is, which is, let's say, 1980. So keep an eye on that. Looking at the weekly gold, pretty much the same story. We're just kind of spinning around 2000. Let's see what happens. I mean, longer we're up here, we're holding above these boxes. We're holding above this support. All these things are support now, right?
Mm-hmm.
Even here. So generally, we can say it might not be rallying hard, but hey, it's quietly
not going down.
It's not going down, and it's quietly holding on to the correct places.
Yep.
So that's so I would block it out like that. This area, that area, and we're well above that.
Mm-hmm.
Well, Let's see how it goes. For now, it's bullish. We did have 3 shots at the high, so that's something to notice also. And I would go with the momentum.
Yeah, it looks good. Let's see how the correction plays out.
So far, it's been very quiet and bullish.
Agreed.
Talk about quiet and bullish. Well, here's copper.
Yep, that's what I'm going to talk about too.
Great. So we talked about it coming back and testing the 50% of the square last week, and
there it is.
There it is. We came and did that, along with the false break to boot, the lower low here, and we had a very strong reversal. Let's see if we get any follow up next week. We might be able to go up and tap the other side.
Agreed.
Weekly copper, not much. Just
still stuck in that triangle.
Still tracking the triangle. We broke the downside. So I would say, we kind of got under the bigger, the bulk of the trading that was happening there. And my guess is if we can't really penetrate up there in a hurry, we're probably going to build up another, sort of a box down here.
Right.
And continue to consolidate. So for now, we'll wait and see. Nothing exciting going on. And I don't think it's a market you want to be short.
Nope.
So you wait for the consolidations to finish and for it to rotate back into place. Let's move on to the dollar.
What's the dollar doing? I thought it was supposed to be dead, Barry.
Well,
not yet, huh?
Not quite dead, but it's certainly taking a nap in here, though.
Yeah.
So there's our box for the dollar. The thing is, that's 90. So let's go to the square 72 because, I put the 90 here because of that cycle we came into. And normally we use the 72. And you'll see why, because the dollar works really well with the 72. And
yes, it does.
And you can see here, we ran up, hit the 72, sold off, but we're holding well above the 50% of the square coming off the high. Again, this is bullish. We're not going straight down. We're kind of holding. We did a double, triple test here. So I would say we're going to continue to monitor this and wait for the dollar to be ready to pick up the pieces and move again. Could we have a little bit more downside? Possibly, but for now, looking at the chart, I think it's doing okay. It's firm and holding at above a critical level. And if you look at the weekly, we're well above the 90 from the low, which is a critical point. Again, we had 3 weeks, a whole lot of nothing, right?
Yeah.
So let's see, maybe something will shake up next week.
Yeah. With the Fed coming out, it should affect the dollar pretty strongly one way or the other.
The basic idea is above, let's say above 100, right? Above par, sort of, this is all bullish. There's nothing wrong with it.
Nope.
And remember, this is holding, up at these highs, right? If you look at the bigger picture, we're right here.
Yeah, which as long as it holds that area, that's very bullish.
Yeah, as long as we're holding, these are highs from 2015. So that's bullish, and not to let that put you to sleep, right?
Right.
Because if we take off again, we got plenty of space to run. So just want to make sure, keep the proper perspective. Looking at the weekly. Nope, not the weekly. Let's go back and look at the euro. Well, the euro is also kind of bullish.
Yeah, trying to hold.
Now, last week, I thought that was it. We started slipping below the square. So I thought it was going to probably be done here at the square and trade lower. But nope, we got back up. We were sitting on top of the square. So let's say 109.5 or so. So this is bullish for now. We'll see. But our cutoff line really is about 110, right? This is the next 8 into the next square, which is a critical level. So I think long as we're able to hold in that range, it's not necessarily decided, but let's see how far we can push that. But in general, I think long as we're up in there, we have to respect that, and we'll see how it goes. But hanging up here like that, if we break to the downside, I think then this up leg is done. So that's how I'm looking at it for now.
Yeah,
right.
Breaking below that 144 would be really bearish.
At this point, yeah.
Yeah.
Yep. Looking at the weekly euro, we dropped this blue line in here last week.
Right on your half square, right?
110, 111 or so.
Perfect.
Yeah, that's a half square. And we really, we've been talking like that should be like the bigger resistance is right there. And at this point, it's no joke because now we're really flushed against it, right? We really came up against it. Now we have to see next week what happens. And I feel like with FOMC and all of this, something could happen and get this thing moving one way or the other. But looking at the bigger chart, this is we're right in the zone for it to stop moving and roll over. So we'll watch for that. And the nice thing is, after so much time has passed, we can say any move that comes after this will be a continuation and not another consolidation. It'll be a move, a trending move, let's say.
Right.
So that's what it looks like for the euro.
That's a great view of the euro.
Yeah, it's good to have the perspective, eh? I mean, here's the high, here's the low, and here's where we are, right?
Yep.
And it's a good spot. It's great resistance. So we can work off of that. Well, that's all I got. Move on to the commodities and cover what you got. Not commodity land, even not everything's moving. A lot of things are correcting and sideways. And
yeah.
So, but there are some interesting cycles that ended up at some of these lows. So let's go look at those.
Sounds good.
All right. And if you guys like our work, please subscribe and hit the like and maybe share and help the channel grow. Really appreciate that.
That'd be great.
Yep. Well, Ben, are we breaking out?
Sure looks like it, doesn't it?
Yeah, sure does.
It'd be the head fake of the century if we weren't. Anyway, the interesting thing on the NQs is about middle of the week, it looked like we were heading down, right? We got 2 bars under, 3 full bars under, then an inside bar. And it just looked like, because if you looked, I posted this during the week, I tweeted the weekly and the monthly were also at, strong inflection points, either a half square or full square, and they were failing under it. And then boom, Thursday, Friday, there's your move.
Right.
So we're back above the full square. The full square here is around 13,120. So as long as we're above that, it's bullish. I also just drew in this ABCD to see, is this possibly something that we're doing? If this is a breakout, this looks like we were going sideways and now we're breaking out. We should at least get up to the half square, and then maybe we can even push it and complete the ABCD up here.
Yeah.
So as long as we're above this 13,120 area, it's bullish. So again, we've got a defined level, which tells us, gives us a good way to assess what's more likely to happen. Are we more likely to go up, or are we more likely to go down in this market? And that level is this 13,120. Anything else to add here on the NQs, Barry?
No, we're good.
Okay. Let's quickly talk about the commodities before we jump into looking at copper and nat gas. It's an interesting week in the commodities because most of them are either correcting or consolidating. The grains, you and I were talking either yesterday or the day before, Barry, where it looked like there was a clean out move going on there.
Yeah.
And today at the end, near the close on all of those, big rallies. They all went from being down a lot to being green on the day.
Yeah.
So we possibly saw some sort of capitulative move there. This coming week, we'll watch the grains and see if we get setups on the lower time frames, the 4 hour, the 60 minute, where we can start saying, okay, this looks like we may have a decent bottom on wheat, corn, or soybeans. Gold you covered, it's correcting in a bullish manner. Silver's doing the same thing. Crude oil you covered, it's back in that range, but with a bullish, tilt. Sugar's just been the monster, keeps making highs, but we may have put in a intermediate top here today and this week, so we got to watch sugar there. Cotton's still in the channel. Cocoa's probably put in a short-term top, and coffee's pulling back, and we're looking for a setup on the shorter time frames there to get involved, because that is looking bullish. But the ones we want to cover, let's go to the ones that look actionable at this time. First one's copper. Barry covered copper. I just wanted to show my squares are placed a little bit differently than his, but we had this false break right on a half square timing, and look where we ended up today with a full bar above this full square level. So with me, the important level is 386, that's this full square right here. Interestingly enough, this low came in around 381, and a monthly half square is at 381. So there was monthly support right here, this low. So I think we're looking good. I think this corrective wave that started here in January ended here today. And now we see if we can move out and up and hang on to this full square. But if we do, the next big test is going to come up here at the half square, which is around 409, 410. And if we clear that, we'll break this downtrend line, and then we could be off to the races here. So the key level for me is this 386, 381 on a monthly basis, but right in this, call it, the full square to the 1/8. As long as we hold that, we're looking bullish on copper. I know you covered it, so we don't have to go any deeper into it. This one, defying everybody, calling for the economic collapse, and China's not going to be growing, so copper's not going to be in demand. Something's going on with copper that's saying, there's bullish prices ahead. So that's copper. And the other one is an old favorite we've been watching here for the last month or so, trying to find this bottom, and that's natural gas.
And we might have found it.
And I think we have the strongest evidence we've had so far on this is we're starting to put in series of higher highs and higher lows on a daily. Last time we did it was October, November, December. It's hard to believe, but on a daily, that's the last time we had multiple higher highs and higher lows.
Right.
Because we had this big move down, and then even here we were just sort of grinding lower. And then this week we made a false break, or last week we made a false break, push up, pull back, battled here at the half square, pushed up, made a higher high again, pulled back with a higher low, pushed up, made another higher high here today. So this is beginning to do what markets do when they're going to start trending higher. And the changing character is very simply just these higher highs and higher lows. So I think nat gas looks good. The key level here is this half square, right? We want to stay above that. And the half square here is in, call it 223, 224 area. Staying above that opens up the top of the square, which is around 280, 282. So every uptrend starts with higher highs and higher lows. I mean, it's baby steps, but this is what you want to see after a market has done something like this. Somebody's stepping up to buy it and willing to, push the price higher than previous highs, and they're stepping up and buying it at a higher level than the previous lows.
Right.
We'll see if they're informed or not, based on the price action. We know the levels, but I really like the action we saw this week in this market, in that it's giving us those sort of green shoots and first signals you see when you transition from a market that's on a better sell to a better buy.
I mean, we're in the right area. Timing seems right. We're 180 bars from the high last August. So, the timing's okay. We're in there.
Absolutely. Anything else you want to add on this one?
Well, the only low, I don't have a whole lot of issues with the low coming in here, because it's either here or maybe we have a rally and come back down and make another higher low or some kind of a low in June. That's possible. But I think this is where you want to start watching, because if it gets going from here, it's a long way up. We have a long way to go.
Oh yeah.
And of course we have time to cover all that. It's not like it's all going to do it in a couple of weeks, but if you want to get into some positions, ETFs, this, that, whatnot, this is the place.
Okay.
Yeah.
Hey, Barry, we're coming into May, right? The April's done. We're coming into May next week, and there's that old trope, sell in May and go away. Not just that one, but what do you do with those old market saws, like the Santa Claus rally, September's the worst month? How do those affect your trading, or how do you incorporate them into your process, if you do?
Well, honestly, I don't incorporate them, but they kind of stay in the background, sort of a background noise,
Right.
So it's something either what's happening in the market in the now, like in the flow, resonates with that or not. Like, let's say we're struggling up into May, beginning of May, and we're looking like we're doing now, the S&P.
Right.
Go back to the S&P. We're kind of crawling up into May, coming off of March lows. And well, yeah, I think that could be a time to sell and go away. And I think we have enough signs for that to happen. So my thing is that the way I do use it is, if I see some evidence, like I said, we lose that 41.50, we start to trade lower a couple of days. Well, then I know I'm more confident that, yeah, this could be a longer 2-3 week leg, and I would adjust the position sizing, and also profit taking. I probably move more to break even and try to hold on longer for some positions than to cover it right away, like hit and run, like doing this smash and grab stuff.
Right, which we've been had to do for the last 6 weeks.
Man, last few months has been nothing but that.
Right.
So like Santa Claus rally, well, if it looks like we're setting up for a low, we have evidence to show that, prove that, yeah, there's enough things at the low that can point towards a rally. Well, yeah, then we're on board.
So you use it almost like a confirmatory type thing, right? Like if it conforms with what you're seeing in the technicals and your geometric counts or cycles, then you say, okay, just add that to the positives or the supporting evidence. You don't sort of look for that as a primary tool.
No, not at all. Not at all.
Right.
But I use it to slightly maybe inflate the way I trade,
Right.
because it'll add to that.
Right.
It'll make me, it's like getting in line with the natural cycle. If you align with that, okay, great. Then trade away. It's kind of another angle on how we use squares. If something squares out, well, we don't necessarily try to buy that low, but we try to get in on that trend till we get to the next point. So we're trading the trend along from that low, that pivot low where we had that square, then we look for evidence, which would be market moving higher. If it
Mhm.
starts moving, then we know, well, according to that law, looking at the past moves, we can at least look for let's say a 2-week rally. So then we're hard trading the upside. So
Right.
that's how I use it, not to maybe, trigger into trades, but you can use it to, enhance your management of the trade.
Right.
It's
Right.
always
I'm,
on the management side, not the entry side or the exit side.
yeah, I thought it was a worthy topic of bringing up because you see all these, on Twitter and on the internet, you see all these sort of sayings and seasonality and all this sort of stuff. And I think a lot of people are misled into thinking, oh, that's the reason, no matter what, you sell in May and go away. Right. But
Yeah.
I think it's important to know that, price is the most important thing, and what the pattern that's happening and where you are in the cycle and where you are in the pattern is way more important than all these sort of sentiment or seasonality things that while they do, over time prove out, it's not a primary signal that you can use to sort of govern your decision making.
Not at all. Your primary stuff should never be based on news or any general templates. It should be your system that you have tested
Right.
and you trust. So you know what your risk is every time you step on a trade. And this other stuff is to sort of support the direction and help you manage it a little bit better. I call that getting lucky. Like if you're up in with the move that's going up, let's say it's sell in May, and we get a good sell setup, we have evidence for a high, and we're moving, we're doing lower highs and lower lows on lower time frames. Well, trade it away. It's a time to double up and trade, not to use it alone, but use it along with your system.
Yeah, and I think that ties into a bigger sort of point, which is you don't want to fight the market. Right? You don't want to fight the trend. You don't want to try and swim against the tide because you'll drown. Right? It'll overwhelm you.
Well, here's one of these things where we sometimes we talk about it and you go, well, you think that, but not everybody thinks that. So at this point, I'm thinking, well, everybody should have some systematic way to trade it. So it doesn't have anything to do with what they think. It can't be a grudge. It can't be try to prove a point, not to, it's all based on what's the next signal that you get. And, you need that to rest on. Otherwise, what are you going to try to get all this information, Twitter, this, that, and the other thing, and try to,
right,
condense that into a trade? That's impossible. So, but you can kind of keep an eye on it. I kind of keep tabs on some of the news items, not to trade, but just to know, this is coming up, or that's happening, or this is happening in the dollar. So I think it helps you sort of understand the overall flow, but not necessarily getting involved into your system.
And the system is the
sense?
key, right? Yeah, you got it. You have to have a system that gives you some sort of edge. If you're not trading with an edge, you're going to lose.
Yeah, that's what I mean. Like, there's no edge in trading news or trying to get, pushed into, pulling the trigger on basis something like sell in May,
right?
Which is fairly general, right?
Yeah.
So, and we might rally in May. That's why we're watching these levels. Who knows? If it's a rally, fine. If it's a sell, great.
Right.
We have the seasonality with us, so we'll use that.
Agreed. Mm-hmm. What are you going to be focusing on this week? Any particular market specifically?
Well, man, I'm S&P for sure, because we got the FOMC stuff going on, NASDAQ. We can see what's happening with those, watching the dollar, keeping an eye on bonds. And meanwhile, that's happening, really try to see if crude actually is going to get some traction next week or not.
Right. Crude, nat gas. I think the grains are important to watch to see if we did make some lows and it was just a flush this week. If that can sort of build some, like we're seeing in natural gas, where we can see, higher highs and higher lows on a daily start forming, that would be a big sign in the grains. And then some of
Exactly.
the other commodities, see if we break out of these channels. Cotton is one I'm really focusing on because we've been in the channel for months now.
Yeah.
And you're just building up energy. And once we break out of that channel, the move should be really, really strong. And to give you an example, sugar was in about an 18-month channel before it made this massive move.
Right. Exactly.
And that's kind of the the ballistic behind it, is that you get that energy building up the longer it tunnels and sort of just gyrates within a small range. So cotton is one that's doing that. As I said, sugar was doing it early. So we want to watch those types of patterns, and that's what I'm going to be watching this week to see if we get any movement.
And
there.
sugar, you got to watch it here because it looks like we're doing a 45-day blow off kind of a move. Starting 45 days, starting from the low we had February 27th.
Right.
And so next trading day May 1st would be 45 days, and it's definitely a blow off pattern because we just went straight up. So we might get we got to watch your positions here because we could get a decent pullback back into 20 or so, that area.
Sure.
Just to put it out there. So.
But it'll be hopefully May will be exciting. We got FOMC, which should add some juice in there, and we'll see. But have a great week, everybody. Barry, have a terrific week, and we'll talk soon.
All right. Thanks, Ben. Have a great. Bye-bye.
See ya.